Hello to my 80 subscribers. Thank you so much for supporting the channel. This video is just going to be looking at what happened this week and what I bought. So in my view, this week was one of those that rewarded preparation. The market sold off hard, but not because fundamentals broke. It was a confluence of temporary dislocation, Fed noise, and liquidity strains. So early in the week, stocks slid 3 to 5% as the CPI and rates narrative turned hawkish. Fed speaker like Logan pushed back on cuts. Growth in AI names took the brunt of this. And on Wednesday, Nvidia beat earnings, markets popped at the open, but then reversed sharply. Tom Lee was pointing out that this reversal coincided with political charge Donald Trump tweeting and the surprise announcement of the Epstein files release, both triggering a wave of caution. Crypto also continued selling off as a major liquidation shock traced back to October 10th. On Thursday, market volatility spiked, Oracle credit default swap spreads widened, jobless claims jumped, and despite Nvidia's strength, the Nasdaq posted its biggest one-day reversal since April. And then on Friday, the Fed's John Williams hinted at potential cuts, pushing December's cut odds from 39% to 73%. Yields dropped and markets rebounded relatively hard. So what a crazy week, eh? All these companies I've already done a full video on. They're very short watches, guys. I've tried to be very concise and selective with the information I give. I don't want to go on and waste anyone's time. What I'll do is I'll put a link in the description and on the video as I go through each of these companies. So the first three companies are actually AI names. And if you want asymmetric upside and a stronger edge than just holding the video, I would suggest having or at least adding these names to your watch list. So Lumentum builds optical and photonic components using high-speed networking and cloud infrastructure. The chart looks pretty amazing, doesn't it? It had a few pullbacks and volatility, but the strength is pretty undeniable. I first actually spotted this company back in April or May, and it was trading around $50. I didn't size in enough then, and I've watched it run, and I rebought in around $150. And like I said, I covered it again just right before an earnings as the stock popped. What's impressive is how resilient this company has been during the week's broader sell-off. That relative strength is pretty rare. I wouldn't necessarily scale in here, but I'd add it to your watch list. And if we see a retracement further, that's where I'd seriously consider adding more. So Bloom provides on-site cell systems increasingly deployed to power AI data centers and industrial operations off-grid. This is actually one of the latest videos I posted. The bull case is pretty simple here. It's one of the only viable solutions to help data centers hit the new 800-volt standards tied to Nvidia's next-gen architecture. Something that Chris Camillo pointed out on a recent podcast. And the company's already making money. It's not pre-revenue, speculative moonshot. I entered in at around $104, and as long as the thesis remains intact, I keep buying into the fear. Nebius is an emerging AI-first cloud platform scaling GPU compute infrastructure. They're basically building and running their own data centers in parallel to hyperscalers like Microsoft and Meta, and then they rent out that capacity. The stock has pulled back significantly, and it's now on my watch list as a high beta AI catch-up trade. I bought this back when I did a video on it. I've been increasing exposure this week, and the reason I want exposure to this company is because their earnings momentum is so high compared to what they earned in the last year. So the last two are Hims and QXO. Hims is the digital brand selling subscription treatment across hair, mental health, and weight loss. There's really no fundamental reason for the company to have sold off so much. I love the business. It's a great idea that's actually working. Subscriber growth was 31%, revenue growth 73%, and they're now entering hormone health and longevity, which I think will be a huge unlock given demographic tailwinds in aging Western populations. This is why Hims is actually one of my core holdings. So lastly, QXO is a logistics-driven roll-up of building supply distributors using software and pricing tools to scale margins over time. This was actually the first video I made, and for pretty good reason. I think it's one of the best diversified bets in my portfolio. The CEO has a fantastic track record, and analysts have realized this with an average price target in the range of $35 to $40, which is roughly 2x from the current levels. This is my industrial compounder. It's not really sexy, but it works, and I want exposure before the market fully realizes that. Okay guys, that's just a really quick video from me. I just wanted to report what happened this week and what's been on my watch list. Please note that this is not financial advice. This is just my opinion, and please do your own research on these companies before making any investment decisions. It'll help your conviction in these stocks. Again, and lastly, please subscribe. It's free for you to do so, and it helps me out so much. So I hope you have a great weekend. Thank you so much for watching the video.